You were listening to chartingwealth.com for Friday the 8th of January 2016. What is going on? Well, the markets are going down, down, down. Not surprising to most people who follow the charts. We saw the market actually roll over. That is IYY, which is the way we follow what's going on in the total stock market. That's an exchange traded fund that tracks the whole market. Crossed over back in December, early December on the 2nd on our 2-day chart and started heading down. Now it headed down big time until about the 14th of December and then slid sideways. And then after the new year, starting on Monday, the 4th of January, started cranking down again, but not surprising to those of us who can read a chart. And you should be one of those people. How do you learn to read a chart? Well, you go to chartingwealth.com and you sign up for our daily podcast, video, email, whatever you want to call it. We will send it out to you daily. And with that first one, guess what you get? You get How to Read a Stock Chart video link. You get a link to that. Take you about 15 minutes, give you down and dirty hacks, you name it, so that you can understand what a stock chart is and how to start reading it and practicing. And also, we give you the layout that we use at freestockcharts.com. Can you beat that? No, you can't. So let's jump in. IYY. Those of you watching on video, we'll talk about it and you'll see on the screen what I'm looking at. Those listening by audio on our popular podcast, I'll tell you what we're seeing. We have drawn a trend line connecting the candles, the 2-day candles from the 5th and the 7th. We've got a strong downward trend, lots of downward movement. Again, that all started back on the 2nd of December. And again, if you read a stock chart, you don't have to worry about what the talking heads are saying on the news. You can actually see what's really going on in the market. So there are many less surprises. If we drop back to our 4-hour or half-day chart, we can see what happened. Of course, in the morning when the markets opened on the 7th, big down moves in the morning, more down moves in the afternoon. Overall, total market down 2.5%. The movement is well below our 2-day trend line. The reason we care about that 2-day trend line, you'll see when the market finally recovers and starts making some up moves, when it starts to break that trend line, that can give us some ideas as to when we might look at getting into the market, again on a virtual trade. Those of you who listen all the time, you know that we are not a stock calling service. We provide this service for free, and it is for you to learn to virtually trade. Now, once you practice enough and you start, again, looking at the real market and practicing, and you start getting confident, you can make your own decisions on what you're going to pay attention to, and you can read a stock chart yourself. But in the meantime, or even if you already are really trading, you can sure listen to us and learn even more, because you know what? I learn stuff every single day. If I do this for 100 years, I'll still be learning things. That's what makes the stock market one of the most fascinating things you can do in life. It is incredible. It's a great deal of fun and can be very profitable. You should be doing this every day, because how do you get to Carnegie Hall? Practice, my friends. So we see strong down moves below our 2-day trend line, confirmed down moves on our 2-day chart and our 4-hour chart. Now let's drop back to the SPY. What is that? Well, that's a Standard & Poor 500, another exchange-traded fund. It crossed over going down around the same time the total chart did. A lot of times the IYY and SPY look similar because the SPY is so much of the volume of the big stock chart, the big market. So what do we see going on there? Again, we've got a 2-day trend line connecting the 5th and the 7th. We have strong down moves, red candles going down. If we look at our intraday action, what do we see? Lots of movement down in the morning, compounded by even more in the afternoon. Market, the S&P 500 down 2.4% in total. Now, where's the biggest drop occurred? Well, that goes to the third chart we always look at. We do it in this order. That is the Qs down 1.33%. Those are the technology stocks. QQQ is basically the NASDAQ 100. It crossed over, going down a little before the total market and the S&P 500 back on the 30th of November. Tracked sideways for a while and then dropped over. in December, about mid-December, leveled out to the end of the year, and then accelerated on down. If we drop back to our half-day 4-hour chart, what do we see? Well, we see continued strong moves down throughout the course of the day. We don't even see a bottom being reached. Sometimes you'll see your downward, your down wick paralleling the same bottoms, but that did not happen throughout the course of the day. We see our derivative oscillators continue to accelerate. We crossed over going down actually before the end of the year. It happened right there at the end of the year. Before the beginning of the year, the crossover going down started on the 4-hour chart and has continued strong down movement, still well below the 2-day trend line. Like I said, 3.11%. So we have confirmed down moves on our big charts and our small half-day charts for both the Qs, the S&P 500, and IYY. What does that mean? Well, not always, but it does this time means that gold is going up. Gold was up 1.41% for the day. It crossed over back on the 14th of December and slid sideways for a while, which didn't make our MACD all that helpful as far as an indicator goes. Those of you who know anything about the MACD, you can look that up on Investopedia or just Google it. MACD, moving average convergence divergence. That indicator is not real good when the market's slipping sideways, but when it starts to move, it gets pretty good. And what we see happening when we go back to our 4-hour chart, we can see if you'd have jumped in when it crossed over going up, oh, you'd have gotten in at about 102 at a high. What's it done since then? Ended the day at about 106.15. You would have been doing really nicely, quite nicely. Still above the 2-day trend line. We're starting to feel better about our 4-hour chart again, as we've talked about over and over for many months. That 4-hour chart was golden when gold was really moving. It'd cross over in gold, it'd make nice climbs up. It'd cross over going down, it'd make nice declines back up and down, up and down. It was like printing money, virtual money, wasn't it? Amazing. Well, maybe we're going to get back into that. In fact, we're seeing this chart work this time. Let's see what happens when gold peters out and starts to roll over, if it gives us good signals for inverse trades in gold. That is where we have ended the day on Thursday as we go into Friday, the 8th of January. January's already starting to run through. So hope you have your copy of the Stock Traders Almanac for 2016. Jeff Hirsch is the man. Saw him the other day on CNBC. He and his dad, Yale Hirsch, of course, have that publication. If you don't have that, you need to have that every day and look at it. It is historic trends in the market, very helpful. Every single day the market is open. Love that book. Buy it and give it to friends every year. We wish you the best. Thanks so much for joining us. You have questions, concerns, problems, we like to hear from you. Follow us on Facebook, Twitter, YouTube, Instagram, you name it. We're out there. We're here for you. We love to hear from you. Courses you need, things you're not getting, things you don't know, concerns you have, things we don't address. Let us know. We're here for you. We'll try our best to do that. Thank you so much. God bless from chartingwealth.com.